Hello and welcome back together to my weekly update on the financial markets. My name is Jens, and like in every video I will cover with you today the S&P 500 index, US oil, gold and Bitcoin against the US dollar. I will cover the weekly, daily and 4-hour time frame so that you know what to do the next days and weeks in the markets. Let's start directly in with the S&P 500 on the weekly time frame. On a weekly time frame, you can see that the last weekly orange solid uptrend line here is broken to the downside, and we have seen a massive correction that went very fast to the downside and then very fast to the upside. We nearly bounced to the 200 moving average. MACD on the weekly is crossing to the upper side, all bullish signs here. And also the recovery of this decline went so far that it's unlikely statistically that we'll see another leg to the downside. So probably this is already the lowest point of this correction, and afterwards we will see probably higher prices. If we drop one time frame lower to the daily time frame, you can see that the daily white solid downtrend line is broken to the upside, and at the moment we are in a corrective phase back to this daily support zone for price. What you can see at the moment is that we have seen a retest, then a bounce to the upper side, and now is the question, we will see directly outbreak to new all-time highs, or first another leg to the downside to retest probably this daily support zone here. In my view, that's the more likely scenario, so that you get an A, B, C wave that will finish then the corrective move, maybe a little bit lower. Can't say that exactly right now. Also, what speaks for that is that MACD on the daily is still pointing or crossing to the downside, so maybe more future downside momentum. We delete that one out and drop one time frame lower to 4-hour time frame. You can see that I was drawing in a Fibonacci retracement level here from the low of the movement to the high of the movement, and then you get these nice levels. These are support zones. One important is the 0.382 Fibonacci retracement level, and also the 0.618 Fibonacci retracement level. That's the last hold normally for the bulls, and that's the first hold for the bulls. Sometimes you can also use the 0.5 if you can combine it with a good support and resistance zone. Here you can see I have already a trade set up. So if we see a push through and taking out this last high here to the upper side, I would assume that the bulls are completely in control and we will see faster, higher prices than expected. So I would enter a small position with risking 0.5% of my account balance on the trade to the long side. The stop loss would be the low of this small corrective movement. But like I said earlier, I would expect another leg to the downside and see at least the 0.382 Fibonacci retracement get tested here before continuation higher. If that happens, I would like to draw here a downtrend line. Let's choose the right color. And if we then see a break, retest, and break of the retest to the upper side, that would be really a confirmation for me that we got the necessary cool down phase, cool down time before then continuation higher, and that the market is not directly exhausted to the upside, and then we will see a nice move to the upside. This looks a little bit. We don't want to change the trade setup, so something like that could be realistically, in my view, the moment on the 4-hour time frame. MACD is to cross through the downside. So yeah, that's for me the most likely scenario. For sure, we can break lower. Nothing is impossible in the financial markets, and we don't see all-time highs this year again, but I think it's a more unlikely scenario. So I'm overall bullish long-term, and short-term a little bit bearish, before then again bullish again. But like always, if you subscribe to my channel, you get updated next week what I have done, what I would do, how the situation changed, so that you always know what I'm doing at least, and then you can decide for yourself. That's all I have for the S&P 500 index. Let's continue with US oil. The weekly time frame on crude oil zoomed out very far to see this monthly red solid downward line here. That one got clearly broken to the upside, and since then we moved into a corrective phase on the weekly that could develop to an A, B, C correction, and I would personally expect that like C goes a little bit lower than we currently are. And we got this orange solid weekly downward line till price stays below that, I stay bearish for the weekly. If we zoom a little bit more in, you can see that price was violating with this weekly support zone to the downside. What normally follows is a corrective phase to the upside to retest this broken level and then continue lower. At the moment, the MACD wants to cross to the upside, which would be bullish, so maybe the phase where we retest the broken level. If we drop one time frame lower to the daily time frame, you can see that the daily white solid downtrend line is still intact, not broken to the upside yet, and I would expect maybe we will see a retest of this white solid downtrend line before then continuing lower to lower prices, maybe the mid-range of $50 per barrel. And yeah, at the moment I don't see on the daily time frame a trading opportunity until we reached or retested that level again. And if we drop one time frame lower to the 4-hour time frame, you can see that we was building out here a support zone for price. If you are a really short-term trader, you could maybe wait for a break. Let's roll one in. Break, a retest, and a break of the retest to the downside. And in that area here, you can look for short opportunities with prices lower than the last lows here. But that's not my style. I would prefer first a bounce to the other side. That can well happen. Then we find here enough support for price, make a retest of these levels, and then roll over again. But we will see. Trading is reactive, not predictive. So at the moment, no trades for me. I keep you updated as usual. Let's change the chart to gold against the US dollar. Gold also starting here at the weekly time frame. You can see red monthly solid uptrend line far from price away. What followed was this weekly orange uptrend line, also not broken yet. Price is far away from that, and the uptrend got steeper and steeper and steeper. But at the moment on the weekly, higher highs, higher lows. That's an intact uptrend so far. But historically, the MACD indicator is stretched pretty much to the upside, even in comparison to last or historical highs. For that, I'm thinking it's time for cool down, for continuation higher. I'm a believer in gold long term, especially the next couple of years with geopolitical situations going on, so everything speaks for gold. But on the short term, I'm not so bullish. If we drop one time frame lower to the daily time frame, you can see that also the daily uptrend is still intact, the solid one and the secondary white dotted one as well. You got higher highs followed by higher lows. So far, also an intact uptrend. MACD, yeah, ain't looking that great. It's cooling a little bit off, and at the moment the cross ain't looking really like a cross. Maybe it's a continuation, and maybe MACD will also turn into a negative field. We will see in the future. If we drop one time frame lower to the 4-hour time frame, you can see now everything in detail. You can see that we're making higher highs and higher lows, lower lows and lower highs. That's the correct term, to the downside. So an intact downtrend, short term inside and long term uptrend. But because I'm looking for cool down, I'm looking for early signs, confirmation in the short term time frames, for rollover also in the time frames that are higher, like the daily and the weekly. So for me, I was setting up a stop loss above the last high here. I was already entering after seeing, if we zoom a little bit in, this head, shoulder, shoulder, head and shoulders pattern. That one got broken to the downside. I entered here with a small short position, 0.5% of my capital at risk. So far, a little bit in loss with this position, but really small. And I'm expecting that we will see the rollover here, continuation higher, lower, and getting my target around the $3,000 mark, at least at a retest level of this white solid uptrend line here. But it's an uptrend, so the trend is your friend, so you technically shouldn't short an uptrend. I burned my fingers in the past a lot with that, so be cautious taking my advice here. It's no advice, I'm just telling you what I'm doing. You have to make decisions by yourself. Because of that, I'm afraid that buyers are too strong here, and then we will see again maybe a push to the upside and continuation higher without cooling off really. I think that would be an extreme scenario to see something like that. then geopolitically something went really wrong in my opinion, or the stock market are crushing down, and then gold is probably profiting for that and rising even higher. And in that case, I would get stopped out and I would immediately open up a new trading position to the upper side with a stop loss below the lowest point of this movement here. Haven't done something similar in the past yet. I would like to try that, to have a position set up in each side. In the worst case, I will lose 1% of my account balance because both sides got triggered and both sides went in the stop loss, because that's the range of my stop loss here. And then price will continue in one way or another, and that would be the worst thing, but we will see. I tried that one out. You don't have to do that too. You can learn from my mistakes. And if you have an opinion on that, please drop it in the comments. I would be really interested in that. That's all I have at the moment for gold. Let's switch to Bitcoin. Bitcoin at the weekly time frame. What can we see? An intact uptrend with higher highs and higher lows so far. Orange solid weekly uptrend line and a lot of support zones in orange here. The monthly is far away from price and also not broken. MACD indicator crossed to the upper side, which is a bullish sign. The one thing that we could argue that could develop is a turn and a cross to the downside. Then we have a higher high in price, but a lower high in the MACD indicator that would get a divergence price to MACD, and that would be a bearish sign. But so far, MACD hasn't crossed on the weekly to the downside, so price can still continue. I'm long, like you can see, and I will explain my trade like in past episodes more in detail at the daily time frame. On the daily time frame, you can see that the white solid downtrend line of this correction has been broken to the upside after a small consolidation. You can see better on the 4-hour time frame. I went long with a stop loss at the lowest point of this corrective movement, and since then price went to an all-time high at $112,000 per Bitcoin. And at the moment, MACD wants to roll over, crossed already to the downside. You can see the loss of the 10-day moving average here. And if we drop one time frame lower, the 4-hour time frame, like I already have said, we can see that one in more detail. I have drawn in MACD divergence here. So MACD is making lower highs while price was making higher highs. We had a not broken 4-hour blue dotted uptrend line. Now we have finally lost it. We have seen the all-time high, a higher low, a lower high, and now we already also have a lower low that confirms the downtrend. We'll probably see now maybe retest this level and then rolling over. How far? That's the question right now. I have also drawn in here the Fibonacci retracement level from the low of the movement to the high of the movement. So the first stop, in my view, would be the 0.382 Fibonacci retracement level around $97,000 per Bitcoin. And that would be a good area to increase maybe the long position here I have. I was risking 1%. I already moved my stop loss to my entry level. So the trade is technically risk-free except the fees I paid to enter the trade and to exit the trade. And you can then also draw here a downtrend line. If you want to be sure, you wait for a break, a retest of this downtrend and a break of the retest and to the upper side. And that could also be an area to increase a position or open up a position if you haven't yet. But like always, it's your own financial decision to do that or to don't do that. Yeah, there's a giant chance, of course, that we don't stop at the 0.382 Fibonacci retracement level and drop all the way back down to this daily support zone here. That's the last hope to hold them. I think everything below that would, for one, trigger my stop loss, and I will go out of the trade without any profit. And then the price will, in my opinion, probably also drop lower than the weekly uptrend line, and then the top of this 4-year Bitcoin cycle is probably in. I don't personally believe in that. I think the signs show another scenario that we'll see higher highs and a continuation of the last year of the 4-year cycle that was every time pretty bullish for Bitcoin. And I also see that here. Also the P cycle indicator hasn't topped yet. You can't be sure with that indicator if that would be a 100% thing. Everyone would use it and be already rich, but that's not how it works. Yeah, for sure. Also, we can see new all-time high following directly, and we see only a short pullback to this support and resistance zone here in combination with the 200 moving average on a 4-hour time frame. But I also think that that's maybe not enough of a cool off before continuation. That's it, all I have for this weekly episode. I hope you're all doing well and have a great start into next week. Till next week, bye bye.